Hey guys, so gold streams again. So it's the weekend, Saturday. We're gonna do a simulation session on gold. We're gonna do top-down analysis, so from the higher time frames down to the lower time frames, and we're gonna break it all down. Talk about the trades that we take, concentrate on risk management, and concentrate obviously on following the rules that we have set. So I'm gonna just close these charts from the last one that we did. So last weekend. Close these up, new simulation, as always, go random date calendar. Right, so this is going to pick a total number of, say, 7 dates. We don't want to go too far back, so we want to go from the 1st of sort of August all the way until we can go the 1st of December, that's fine. And 2024, both dates here. All right, we only want Mondays. Perfect, date first. All right, so let's pick that 7 days. Great. Okay, put these into the random picker. This will pick a date for us at random. Bear in mind, if we get, okay, it's good. So if we would have got something like the November, early November, there'd be no point because I think we can all remember those days and what happened on those days. So we've got the 16th of September. Yeah, 16th of September. That's the 23rd, 16th. All right, perfect. Gold, count size doesn't matter. Okay, start simulation. Let's not mess with any other settings on there. So we'll add the 4 hour, add the 1 hour chart, 30-minute, basically all the time frames that you use to trade, and the 15-minute. Okay, so we're going to open 4 hour up, open the 1 hour chart up, open the 30-minute chart up, and open the 15-minute chart up. Right, perfect. So we got to fix these charts up. While we fix these charts up, I just want to talk about, obviously, with simulation, it's a lot of people will turn around and say, hey, you know what, simulation is very, very easy to do. You know, like back testing, I'm always profitable on back testing. You know, back testing is not interesting for me. I don't find it, you know, whatever the case may be. Let me just explain something to you guys here. You know, because if you're very good at back testing, and when you're back testing, you follow your rules to the T, and you're profitable on back testing, then that's fantastic. What that means is that you understand the fundamentals of trading, you understand how to read the charts, you understand how candles move, and sort of what setups in your high probability setups, and what setups aren't high probability setups. But you need to learn how to control your emotions, and then that's it. So what the problem is, if you're very, very good at back testing, and say in the real markets, you know, you're terrible, you're not profitable, you're still struggling with that, then the main thing that you need to work on is your psychology, and obviously get that fixed. What I find really, really good for psychology is, first of all, I'm gonna just be honest, it's probably one of the hardest. It's not probably, it is one of the hardest things to actually work on. It's one of the hardest things to understand because a lot of people can't take a loss, right? And people sort of people are not used to taking losses and don't understand about how to control taking a loss. So okay, we skipped 1 hour too far ahead here. That's fine, not a problem. It is what it is. It's not going back. So yeah, the thing is you wanna understand psychology, and the best thing I find to understand psychology is to read, and obviously only invest money that you can afford to invest. You don't want to invest money, and I was actually reading a book up on this today, and you know, it reminded me of it. You don't want to invest money that you need for bills and for living, and you know, money that you can't I don't want to say you can't afford to lose, because you shouldn't see money in your account as something that you can afford to lose. You shouldn't trade out of control with it. But it should be something that, so we've got support down here on gold. It's fine. Perfect impulse entry, by the way, on the 1 hour time frame here. It's a shame we went an hour too far. But yeah, with the money that you have in your account, it can't be money that you need to live on. It can't be money that means a lot. You should see the money in your account as like just a tool that you need for trading. The same, for example, as like some people would have risk management tools. Some people use. Let me just do this 1 second here. Some people will use whatever tools they may use for trading, like simulation software and stuff. That's like another tool for trading. So we're going to clone this on all the time frames. The money in your account should just be seen as just that. It's a tool for trading. That's all it is. So we can see here on the 4 hour time frame, we've got a very strong support sort of forming as well on 2578, 2577 right there. On the 1 hour time frame, that's the same support as well on the 1 hour time frame. We had a resistance here, and we had an amazing impulse entry on gold here as well. It's a shame that sort of we went an hour ahead. So we normally start trading 2 hours before pre-London. But it's a shame we went an hour ahead on that. So we're just going to clone these to all the time frames. Let me just take this off. Yeah, delete the top one there. Cool. Because that resistance is no longer valid. As you can see, the same thing on the 30-minute time frame. So you had a resistance here. Gold was sort of in an uptrend already. You had a resistance. Candle made support, broke the high, and went 30 pips to the top side. It's a shame that we moved an hour too far ahead, but it is what it is. It's simulation. The one thing you don't want to do, is just pointless, is go back. Just so you can take that trade on the simulation. Doesn't make sense. But yeah, so if you look at on the 15-minute time frame, we had a wick to fill on the 15-minute time frame. We broke structure. We had confirmations via impulse entry on the 1 hour time frame. So it was a perfect entry, very small, sort of 20 pip stop loss there. Price continue and fill the wick on the left hand side. So you come into the markets, you see something like this, and you're going to have to sort of just be patient and understand, hey, you know what, I'm going to have to wait now. Ideally, what you'd want to wait for in this case is gold to come down, sort of retest, and then it can continue moving up, which is perfect. But we're going to have to wait and see sort of how these candles close, what it does on the 15-minute time frame there. We've got, again, this is the 1 hour time frame. So the 1 hour time frame there is breaking the high on the previous candle, but price has already sort of moved up 100 pips. It created this little resistance here, broke the resistances, and moved up 30 pips, right? The 30-minute time frame is 1, 2, 3, 4 bullish candles now. You've got 3 candles too late to enter that trade, and the 15-minute is trying to sort of is breaking the high as well, but it just doesn't make sense to have an entry at this point, not for me anyway. So this is, let me see here, sessions. Yeah, this is 1 hour before London Open at this point. So I just want to see, wait around. If this goes up, that's fine. It's not a trade I'm willing to take because it's the fourth half an hour candle that's moving up. The 15-minute time frame is always a weak time frame. So like I said in the beginning, ideally speaking, I want to see some sort of move down, and then gold start closing on the make a sort of support on the 15-minute time frame, and then it can continue going up. But let's just see, at this point we're waiting. We don't want to enter the move because it's already moved up so much. It's already moved like 40 pips. So let's just see. If we can get gold to come down, create support, give us a possible entry, great. If we can't, then we wait down, we sort of wait out and see what it does do. And if it gives us any sort of confirmation, then we're more than happy to enter a trade. So we got a support down here on gold. So 25.85 there. See the 30 minutes breaking the low. That's This is what I mean, sort of taking trades just because the candle highs are broken. Gold's already done the move. This was the move to catch. We missed it. So you don't want to be too hasty. The 1 hour is also coming down, retracing. So we got the 15-minute candle is just closed. Look at that close on the 15-minute. All right, so it's testing the previous resistance. All right, it's testing the previous resistance in the 15-minute time frame. 30-minute support is down here, 25.84, 25.85 on the 30-minute. That's support. So we're just going to see what gold does at this point. If we can get this 15-minute candle to close bullish, but within sort of decent size, then that's great. But at this point, we're 10 minutes away from the 30-minute candle closing. 30-minute candle's broken the low. It's not respected the trend. So it's very simple. You're in a waiting game. Let's just see what happens here. All right, for candles, obviously for a trend to continue, candles need to make in sort of an uptrend. So higher lows, right? Higher highs, higher lows, higher highs. This candle, for example, it broke the high, it broke the low. We don't know how we did it. We don't know which it broke first, but it's not respecting the trend, and you can see gold started consolidating there for a bit. But for a trend to continue the same as this, for example, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? Higher lows, higher highs. That's an uptrend. So we got a 30-minute now is closed bearish. The 15-minute candles closed bullish, right? And it's created a support down here. Sorry, the 1 hour candle. So this was the previous one. The 15-minute candle here is closed bullish, but it respected the high and it broke the low. Let me just see if I can move these around. Excuse me. Right, so we'll move that over there. Yeah. So the 15 minutes candle was closed bullish, but it broke the low. And it respected the high. The 30-minute candle was closed bearish. So at this point, we're waiting. We're waiting to see exactly what gold can do, what it can show us. All right. I'm going to pause this here. Can you enter a trade? You've got to ask yourself these questions, right? When you're in the market, can you enter a trade here? Because the 15-minute closed bullish, made support, and is breaking the high. Right. You shouldn't enter a trade there. The reason you shouldn't enter a trade there, because look at your stop loss. It's 27 pips, 26, 27 pips, right? This candle hasn't respected market structure. It's broken the low. Same thing on the 30-minute. It broke the low, and now it's coming up, right? So it's a very, very risky trade. Are you going to have a 27, 30 pip stop loss? It's not going to make sense. So the 1 hour time frame, again, is going to close in 20 minutes. Even on the 1 hour time frame, you know you've got same stop loss is massive. It doesn't make any sense to enter the trade. The 4 hour candle is breaking the high, right? Which is very, very good. But what we're going to have to wait for is we're going to have to wait for this 15-minute candle, which closes in 4 minutes, right? It's closed bullish above this sort of resistance here to the left-hand side on gold. That can be our confirmation for the next candle to wick down and then start breaking the high for us to have a trade, a buy in here. At this current point, you haven't got a trade. So you don't have a viable stop loss. You're going to have to be patient. So this candle's closing up soon. Okay. Candle close bullish with a massive rejection wick to the bottom side, right? Very small body bullish, but it closed below resistance. Okay. Sessions here in the next 15 minutes then. So we've got London Open coming up. It can continue bullish. It has potential to continue bullish. At this point, let's just see what this 15-minute candle does. With London Open volume, it can continue bullish. So let's just see. Can we get a bottom wick on the bottom of this 15-minute, and then a break of the high? Because the reason that's important is I want gold to break above this high as well, right? On the 30-minute time frame. The 1 hour high is being broken, 4 hour high is being broken. We've got London Open coming in. Let's just see if gold can break past these wicks. Right, so these wicks are only a couple of pips away. A 10 pip stop loss. We're going to enter a buy, and this is an impulse entry, so you're not going to go full risk on this. Okay, so a normal risk amount would be 2%. In this trade, we're going to risk 1.5%. We're going to, okay, visual mode, right, risk 1.5. Okay, so we're going to have stops below this area. So stops around 15 pips. And take profit doesn't really matter. Let's just see sort of where we can go with a take profit. Risk to no stops. Why have I got? What's going on here? Risk 1.5. We want to buy. Did we enter a buy? We entered sells. Okay, didn't let us. Okay, so we're risking 2%. Okay, so apparently we're trading gold with a 4 pip spread, which is insane. What is this? Right, so we're gonna have to see sort of what it does here. If it continues up, great. If it doesn't continue up and breaks the low, then right. This trade is not going in our favor. But the one thing that I don't understand is 1 second there. So 12 pips. Let me close this forward. Let's just see what's going on. Right, so there's no point of a trade like that sort of hitting your stop loss, letting the trade hit your stop loss. In fact, your loss is short. All right. You tried something, it didn't work. These are what simulations are great for. Candle broke the highs, so it was breaking the highs on the 1 hour time frame. It was breaking the highs on the 4 hour time frame, breaking the highs on the 30-minute time frame, 15-minute time frame. You're expecting London Open volume to come in. At this point, we're gonna have to wait now and see how the 30-minute candle closes and what it says. If we can get a possible retry of this buy, if not, then it's completely fine. As you can see, sort of market structure is not printing what we expected to print at this point. So we're waiting. It's a waiting game. Right, but we've only had risk on dollars. Okay, so we've only lost. We risked 1.5%, and apparently we lost 0.01%. So we had the risk set in dollars there. But you get the gist. The stop loss was like 4 or 5 pips away, and we ended the trade with a 4 or 5 pip. We're saving 4 or 5 pips on there. So let's wait now. Let's see. The 1 hour candle's closing. Look at what the 15-minute candle's done. The 1 hour candle is closing. The 4 hour candle is flipping bearish. Sorry, breaking its own low. The 1 hour candle is closing. If we get a close below this resistance on the 1 hour candle, 30-minute candles again is closing below the support. Sorry, and support here as well. Let's see. We're going to close in 2 simulation minutes. Speed this up a bit here. Let's see what we can get. All right. So we got a nice healthy close on the 1 hour, on the 30-minute, right? And this candle is just very volatile, right? We're gonna wait for it to come up, make a little bit of a top wick burst. If it doesn't do that, it broke the low in the first couple of seconds. I'm not interested in taking sales, so we're gonna wait for this candle to come up. There you go. Now it's breaking it. Now it's making a top wick. Okay, now if the candle comes down, breaks some low again, we can look at taking sales. All right. So when a candle comes down in the first couple of seconds and starts breaking its own low straight away, basically on the open, it's not a good trade, right? You don't want to, you don't want to enter a trade there. Wait for candles to form the way you want to see candles form. So ideally speaking, you want to see a candle. I'm going to take a sell here, by the way, guys. You want to see a candle making top wick first if you're looking for a sell, and then come down and make a bottom wick. There you go. Right. See if we can get continuation. So we need gold to come down and continue breaking its own low at this point. Speed this up here a bit, open up trades. Okay. So the 15-minute candle is opening, still open. We need the 15-minute candle to close below this particular zone. Alright, good. So we've got 12, 13, 14, 15 pips coming down. 18 pips, there you go. 18 pips, 1% on the account. Alright. Gold's coming down. What we're going to do here, we're going to close partials, close 90%, close 8%, sorry. Set stop loss to break even, remove take profit, and just let it go. Speed this up a bit, see what it does. So the 15 minutes candle's closed. Great. Wait and see if gold can continue moving down. See what it can give us at this point. So the reason I closed the trade is because I'd already lost one trade for the day. Okay, so I'd rather secure 1% on the account, and sort of have stop losses at break even. And if gold wants to drop all the way, then gold can drop all the way. If it doesn't want to drop all the way, then it is what it is. So we've got trades here running in at 20, 26, 28, yeah, 30 pips, which is good. 30 pips profit. Let's see if it comes break, hits our break even. It is what it is. That's fine. So we had one trade, we had two trades, right? We lost here, lost like 11 pips, and then made 18 pips down there. Okay, so we were risking lower risk here. Okay, so I forgot to set my risk to 2%. It's really not my day on these settings. Anyway, we're gonna move over to the next day. You understand why we took this trade, right? Why we entered this trade. So we tried buys. Okay, once gold broke market structure up here, expecting London Open to come in, and sort of it broke the wicks to the left, expecting it to continue. Stop loss was like 13 pips away. We closed at like 8-9 pips. All right, with 1% risk. The reason we had our entry down here and not here on gold is because we were waiting for a top wick to be formed first. Instead, it just decided to break its own low straight away. We secured, because we already lost one trade, so we secured like the majorities are like 18, 19 pips, 80%, and then the rest came back and hit some break even. All right, so that's pretty much it. So we're gonna move over to the next day now. And again, you want to treat this sort of exactly how you trade in your normal day-to-day basis, how you follow your rules, and because the whole point of a simulation is to see if your rules and your actual trading plan works, right? So we've got support here on the 4-hour. We've also got a resistance here on the 4-hour time frame. I'm going to clone these to the other time frame, see what that looks like on the 1-hour. Great, so on the 1-hour time frame, excuse me, we've got support here to the left-hand side. Okay, and gold's obviously tested the support multiple times. All right, so we can see the fake out on the 1-hour that we actually traded yesterday. All right, and now we're waiting. It's got a lot of clean range to the bottom side of 110 pips. Yeah, 110 pips. But we can see that it's broken below the 1-hour, but it closed with a small body. All right, So we want to look at now the 30 minute. The 30 minute gives us a better picture. Can actually break down the 1 hour candle. So we can see here on the 30 minute time frame, we had a bearish close below the sort of the support, but just on this support area, candle come back up again, create a resistance, and then continue moving down. Okay, and it closed underneath the support. So let's see what that looks like on the 15 minute time frame. And on the 15 minute time frame, you pretty much got a very nice setup for an impulse entry. All right, and remember the 4 hour time frame is bearish, right? Also closed below support. The 1 hour time frame, the 30 minute time frame has a wick of like 16 pips to fill, and on the 15 minute, we've got like an impulse entry setting up. Just slow this down a bit, see if we can get a break of the low in that 15 minute candle. All right, there you go. So you want to enter your trade. Stop losses go up here. Take profits, whatever, it doesn't really matter. So we got a stop loss at like 14, 15 pips. You got 15 pips and take profit. We can have like a nice little one-to-one here, but let's just see. We're going to be closing partials once that wick is filled to the left-hand side. Remember, this is a very sort of heavy rejection zone on gold. I'm going to keep an eye on the 15-minute time frame. Let's see what gold does here. So we're going to be closing partials once this wick is filled. Right, so that was way too quick. That's fine. So you want to be closing partials sort of once the wick is filled on the left-hand side. Open up our trades, pending. I don't know why this is... Okay, just wait for the wicks to be filled. All right, perfect. So like 12, 13 pips. All right, close partials here. Close 80% of the trade. Okay. We're going to remove take profits. We're going to put the trade and break even. And if this is going to go down, it's going to go down. All right. We've got a lot of range to fill. Reason I closed partials once the wicks were filled to the left hand side, simply because we got all these rejection wicks on gold in this area. All right. At one point, these candles were very bearish. This candle was very bearish. This candle was very bearish. Same as this candle was very bearish. Right. So you don't want to be taking sort of any risks. So there you go. 30-minute candle closed, bearish, but with a small body. Again, a rejection wick to the down to the bottom side. 15-minute candle closed bullish at this point. So that's why it's important to secure. Let's see what the 1 hour is printing. Right, so the 1 hour is flipped over now and it's closing bullish. If we can get a bullish close up here on gold, potentially we could take a second trade for buys. But we have to see how gold decides to close. 15 minutes close bullish, back in this sort of range. It's a second trade though. We don't need to be hasty with it. You know, just be calm, just relax. Just see you got the 1 hour candle closing in 10 minutes. You got the 30-minute candle closing in 10 minutes, in 5 minutes, right? Just be patient. It's a second trade. You don't really need to take this trade at all. If you don't want to, again, this is just a simulation and to try this. So the 1 hour, the 4 hour candle broke it slow. We took advantage of it. Got like 13 pips. Now it's coming back and breaking the high. The 1 hour candle is breaking the previous high as well. The 30-minute candle is closed bullish back in this range, and we've got range of like 70 pips on the top side, right? If we can get this candle to go wick down first, make a lower wick, and then wick up, potentially we could take a trade. Again, it's the second trade. We're up like 2.1% on the account. It's Tuesday. We don't need to take the second trade, right? If it leaves without us, it leaves without us. It is what it is. We got like 20 pips up here. The candle's gone, right? Perfect. There you go. But understanding the fact that 30 minutes, so that's 15 minute, understanding that the 30-minute candle closed bullish back above this previous sort of resistance here, right? It made a fake out and now it's coming back up and sort of it's filled this whole range of like 70 pips. That's fantastic. The 1 hour also made a fake out down here and filled the whole range to the top side. It's great. So, but you can see the 4 hours just printed side by side. That's why you have to sort of go down and look at the smaller time frame to understand what's happening. Let's move over to Wednesday now. Okay. Perfect. Wednesday. Go over. And it's the same thing every day. That is, you want to mark your supports on the higher time frame. So the 4 hour time frame, you see you got support here, a resistance up here. Sorry, you've got support down here. Got loads of clean range to the bottom side, and you've got quite a good range of like 80 pips at the top side. Let's see what that looks like on the 1 hour time frame. Loading that over. Perfect. So you can see on the 1 hour time frame, you've got a support here. Below the support, you've got a lot of clean range of like 150 pips. You've also got like 50 pips to the bottom side from this support that's not visible in the 4 hour at all. So you've got the support here on gold, right? So let's see what that looks like on the 30-minute time frame, which will give us a little bit more of an understanding of what that support looks like on the 30-minute time frame. All right, perfect. We can go down and move down obviously to the 15 and see the 15 again. So the 15 literally came down from resistance, 70 pips, right? 30-minute, same thing, from resistance, like 60, 70 pips. Sorry, that's 15-minute, 30-minute has come down. It's now breaking the low, it's breaking the support to the left-hand side as well. Look at this is 4 hour candles breaking lows. So let's just see sort of what it does here. So the 15-minute time frame, this is the 1, 2, 3, 4. This is the fifth 15-minute bearish candle moving down. 30-minute candles already sort of broke the zone. This continues like 19, 18 pips. 1 hour candles broke the low. Not something I'm interested in taking at this point because you're too late in the trade. All right. So let's just keep an eye and see sort of how this plays out. So 30-minute candle closed bearish as well below this little support on the left hand side. But we've got the next support like 30 pips away. Let's just see how gold moves and how gold reacts at this stage. So we had a 15-minute close bullish, a second 15-minute candle close bullish. If we can get this 30-minute candles close bullish back in the zone as well, we could potentially see buys. Let's fill that range back up. The 1 hour is closing as well, so it's more important to wait at this stage. Right, so 30 minutes closed bullish, back in the zone. The 1 hour is closed bearish with a rejection wick to the bottom side. The 4 hours obviously still open. Let's just keep an eye on sort of the 30-minute here and see what 30-minute does. So the 15-minute we had an impulse entry, but again, there's no bottom wick on these candles. They're just moving straight up. So you want to see a bottom wick be formed first. Slow this down a bit here. 15-minute close bearish. 30-minute can now start breaking its high. At this point, it's just better to wait for it to close. See what 30-minute does. 30-minute closes bullish as well, and that gives us more of an indication that the buys are valid from this area. But it doesn't close bullish, then not something we'd be interested in. See, so the 15 minutes given us good confirmation that we've had sort of a resistance here formed. So a support, a resistance come up, formed. Candle now close above resistance. We've got the candle breaking the high as well. So we're going to enter based on the 15-minute time frame here. Now our stop loss is below here, and our take profits again doesn't matter. We close where we're comfortable. So we want this to see this candle continue. Okay, continue moving bullish at this point. Trades. So I want to show you guys something. I'm going to remove the stop loss, add a stop loss. Because this 15-minute candle, this 30-minute candle has broke the high. This candle now has no point of coming down to break its own low. Okay. That's why now we've moved stop losses up here. From below the 30-minute candle, we move them up here. Because if this candle now comes down and breaks its own low, then it is what it is. And we've got no business in being this trade. It's not going to be a valid trade anymore. Keep an eye here on the 30-minute, the 15-minute, see what the 15-minute does. We want to see continuation. I don't like the way this 15-minute closed, very indecisive candle. But we've got the 1 hour closing as well. And if the 1 hour can close bullish, then that gives us good confirmation. So good stop loss here. This is now London Open, so with volume we should be able to see continuation back in the zone and fill the top side. 30-minute candles breaking highs. Good. So we're like, see, 18, 20 pips in profit here. Right? Stop loss again at this point gets moved. And now initially we was risking 27 pips. Now we're risking like 8 pips on this trade. Okay, we're like 18 pips into profit here. 3.5% up on the account. So on a close partials, 80% close here. You know what? I'm going to put this on break even because at this point it really has no business coming down. We're going to remove take profit and expect volume to push this candle all the way up. Let's just see what it does. So we've got the 1 hour here as well. 1 hour time frame, we've got range. The reason I'm doing it as well, the 4 hour candle was very bearish. It broke the lows. This could just be a bit of retracement on the 4 hour candle. But we're happy. We're up like 3% on the account. Right, the worst thing that can happen to me as a trader when I'm trading is for me to be in like 18, 19 pips profit and a candle come down and breaks on low again. Like that, for example. Alright? Because then you don't know what to do. Imagine if that was sort of a stop loss. I'd rather be 3.2% up on my account than sort of hit a stop loss. Okay, so we've taken our trade. We're done with this session. Wednesday's finished, so we've had 3 consecutive days of profitability. Now gold can do whatever it wants to do. I don't care until Thursday. As you can see, guys, you can kind of get the gist here. It's sort of simple. You wanna keep it simple. You have your rules set in place. You understand what you're looking for. You've got sort of a plan in your head of what you want to see from the market, okay, and you stick to that plan. The reason, by the way, I'm putting this here is because I'm expecting there to be sort of market structure here on the 30-minute and the 1 hour. But yeah, so you want to see on the 1 hour, there's just like candles just closing very indecisively. Yeah, so you've got a plan. You know what you want to do. You've got your rules set. 1 to 2 trades per day. Me myself, if I win the first trade, very unlikely that I'll take the second trade, but that's fine. So you've got 100 pips left to the side. You can have your own rules. You've got your own plays in place. So you can see here. So look at this on the 4 hour. The reason I could tell this was market structure, obviously this wick on the 4 hour was some sort of retracement. On the 1 hour, you've got candles basically just not breaking above this zone, closing very, very small body. And on the 30-minute there, you can see that it did actually form resistance. And you've got a nice sort of range above that on the 30-minute candles of like 300 pips? Yeah, 300 pips. And on the bottom side, for some reason I can't move this. Let's just see here on the 1 hour time frame. Yeah, so on the 1 hour time frame, you've got range as well on the bottom side of like 300 pips. So very, very clean ranges in gold. So now if you've got the patience to wait for a candle to close above this zone or below this zone, above sort of, yeah, so you want to see if you can wait 25.64, wait for a candle to close above so you can see continuation, or yeah, or below down here at 25.48. Let's see this. So the 15-minute candle is closing. Let's keep an eye on the 15-minute. 15-minute allows you to take entries a little bit earlier, especially if there's a lot of volume on gold. So we got a very, very healthy bullish close. If we can see this candle make come down, make a bottom wick, and then start breaking the high, possible entries here. Again, we're up like 3% on the account. So you got highs being broken. You want to take a buy here. Why is it not letting me put a stop loss? Okay, there you go. Let's see. That's perfect. Doesn't matter where I take profits, by the way, guys. We close as we move along. So we want to see the half an hour candle, 30-minute candle keep pushing up. We want to see this 15-minute candle keep pushing up. So 30 minutes about to close as well. I'm going to be very, very wary now because we entered the trade on the 15-minute time frame, right? We put our stop loss on the 15-minute time frame. That means our stop loss is like in the middle of a candle on the 30-minute time frame. So we're going to be very, very careful into how this candle moves. Okay. And what this candle does. We don't want to see too much retracement. All right, that's perfect. So we've got the highs being broken. Okay. So let's just go on here. Trades. Look at this. We're running in at 24 pips profit. We're up in 2% of the account. Okay. Up 5.2% of the account. Sorry. 0.82. Move our stop loss. We've got two options. We can bring it here. But what I want to do at this point is I'm 25 pips into profit. Is close partials. 80%. Perfect. Stops at break even. Let it go. Let it go. If it wants to go and then sort of give us the whole range, or half the range, and then give us 130 pips, 100 pips, amazing. If it doesn't, if it wants to come back down to break even, hey, we're up like 5% on the account. Doesn't bother us, right? Just wait and see how this 30-minute closes. The 1 hour's closing as well. Just keep an eye on this. Is this trade going to be a big one? Is it going to give us sort of 100 pips? Speed this up a bit here. So we're up running at 40 pips now. Gold will just run sometimes, right? So we're like 150, 72 pips at this point. 6% up on the account. It's Thursday. It is what it is. We can hold this, we can close this, whatever. Let me see what the time is. Yeah, it's coming up to London Open. This candle's got no top wick. This candle's made no bottom wick. I'm happy with this. Say that. 6% up on the account. And we move over to Friday. So yeah, you see, the reason I closed the trade because this candle had no top wick, so it's got no range. It's left no range, and this candle made no bottom wick first. It just came up and sort of started breaking the high straight away. All right, let's go over to Friday now and finish the week. Perfect. So Friday, 2 hours before pre-London. So again, guys, look at this. We've got a support that's been broken, resistance that's been broken here on the 4 hour, and we've got a support here on the 4 hour time frame as well. We're going to move down the time frames, see what that looks like on the 1 hour. So on the 1 hour time frame, resistance broken here. All right, and you had a bullish close, and you've got a wick to fill to the left hand side of like another 60 pips. Looking very good on the 1 hour time frame. So resistance, we've got a bullish close, perfect candle confirmation there. Same thing on the 30 minute, but the 30 minute, you see, 30 minutes coming up to another resistance here, where this candle once was as well. All right, let's just see what it does. It's Friday, we're up 6% on the account. Let's see how we move along. So the 15 minutes creating resistance, 30 minutes closing a small body bullish, but a small body bullish. It's broken the low. Now that it's broken the low, I'm definitely not interested in taking buys at this point. Friday, I would rather not take a trade than take a trade. I don't know why this is moving so quickly. So the 1 hour is breaking the high, the 4 hours breaking highs, the 30-minute closed bearish with no top wick and is breaking the highs. The 15-minute made support and is breaking the highs. This was a similar setup to what we saw on the first day, Monday, that we accidentally skipped at the first hour. All right, but we didn't have anything to the left-hand side. So gold's coming up to a resistance here on the left-hand side. You've got a stop loss of 20 pips. You know what? It's a simulation. It's Friday. It is what it is. Put this there, and let's just see if we can get all those pips on gold. The reason I'm expecting this to move up is this is actually a very good impulse entry setup. So I'm expecting gold to continue. It's going to be based on how sort of this, it came down, it made support in the 15 minutes. It's going to be based on how this 15-minute candle closes as well. But it's a simulation. That's what simulations are for. It's to try things like this. We're having a bit of fun. We made 6% on the account. It's Friday. It is what it is. All right. Broke the high. Amazing. Trades. Stop loss. Yeah, I'm trading my stop losses, even though this is just a trade we're doing for fun on simulation, just to get an understanding of this impulse entry setup here. There you go. So we're up like 17 pips, 18 pips on this. Just gonna set it to break even. It's Friday. I'm not gonna close any partials. There you go. 30 pips, 32 pips. Perfect. That's amazing. That's great. I'll end that here. Don't want to keep you guys here too long. 7% up on the account. All right. On a 10K account, that's $700. And the trades we took, guys, were very, very basic, simple trades. Nothing complicated, nothing out of the ordinary. You know, no like 100, 200 pip trades, right? So we started on Monday, which was, yeah, we started on Monday here. We entered a trade on the break of these highs, expecting gold to move up. It didn't. We closed, secured. The second trade we took, because we're fluid in the markets, all right, is gold closing below this low, 30-minute time frame, this little support, range to the left-hand side of 40 pips. And we entered and we secured sort of like 20 pips. The rest hit break even. Moved over to Tuesday. And, you know, again, like 14, 15 pips, break even. Amazing. Did we not take buys on Tuesday as well? I thought we took buys on Tuesday. No. Okay, cool. So yeah, impulse entry, closed, break even on Tuesday. right? And then Wednesday came around, right? We didn't take any sales. Okay, candle closed bullish. We entered a buy. We closed 18 pips. The rest hit us on break even. But you understand, candle closed bearish underneath the zone. Didn't break the low. Okay, even though it had clean range, it came back. It closed bullish. Didn't really close in the range. On the 15-minute, it was consolidation. Waited for a 15-minute candle to close above previous resistance. Entered buys and secured. All right, Thursday came around, and Thursday we had sort of resistance coming down here, support here on gold, uptrend on gold, right? Resistance formed, candle closed bullish, and we closed at 23 pips and closed the run at like 70 pips. And then Friday, again, simple trades, guys, just simple trades. Okay, on the 30-minute time frame, had a bullish close above support, right? We entered buys and we took 30 pips out of the trade, 7% on the account. The whole time just managing risk. Anyway, guys, that's the simulation session. Hope you enjoyed it. If you got any questions, feel free to message me on Instagram. So at Gold Streams. I appreciate all the subscribes that I'm getting, all the subscribers coming through and the likes on the videos. Thank you.